Have you ever heard of HECM or a reverse mortgage? Well, this topic can be very misunderstood and there's a lot of people with the wrong ideas of it. Hi, my name is Anna Smith and I am broker owner of Bluma Realty, and for that I have invited my good friend Naida, and she's going to tell us all the myths and what to look for when looking into reverse mortgages. Hi Naida, how are you?
Good, Anna. How are you doing?
I'm doing good.
Good to see you.
Good to see you, I know. Well, tell us a little bit about yourself and about the company that you work for.
Okay. I'm Naida Cerrito. I work with Professional Mortgage Alliance. I do all kinds of mortgages, you know, FHA, conventional, reverse mortgages, bank statement loans, cash flow loans. So I'm a broker, so that means I can go to multiple lenders and get pricing from different multiple lenders and try to get my customers the best price.
Cool. Well, today, one of the things that you guys specialize on is reverse mortgages.
Correct.
And I know that you have helped a lot of the clients that I have referred to you and whatnot, but there's a lot of myths out there. Can you tell us what a reverse mortgage is for those who do not know, or a HECM, which is the same thing?
Right. Well, a HECM, it stands for Home Equity Conversion Mortgage, better known as a reverse mortgage. So this is a mortgage for somebody who is, well, now there's actually one for 60 and older, but typically it's 62 and older, and it's based on age, not necessarily credit. So, for example, if somebody has their home paid off and maybe they need some money for long-term care, or they need some money for bills, or they need some money to live, maybe go on vacation and enjoy their retirement, they can go ahead and get a refinance. It's like a reverse mortgage that's a refinance. They basically can get money out of their house and never make a payment again on that loan until after the death of the second person in the house. So that's basically what it does, and it keeps people from having to make a payment. They can use their equity in the home. If people really need money and all their money is tied up in their home, they can't live on equity. They have to be able to live on the money that the equity produces.
Which has to be liquid.
Which has to be liquid, exactly. So they can do a reverse mortgage, take some money out of their house, and maybe, you know, live better, or pay some bills, or maybe use some long-term care in the home and stay in their home instead of going into a nursing home or assisted living. So there's many reasons to use it.
Now there's a lot of people that hear the wrong things about this loan. What are the most common myths that you know of that people are so confused about?
I would say that the most common myth is people think that they're going to lose their house. Okay, and that is the biggest myth of all. Basically, a reverse mortgage is just like any other mortgage. It's a mortgage that you have to pay off if you sell your house or if you die. I mean, you have to pay your mortgage off no matter what, right? If you have a mortgage on the house. So basically, you have to pay the amount of the mortgage. So you're not stuck in your house if you have a reverse mortgage. If you want to sell it, you can sell it and you just pay off the amount of the mortgage. And the rest of the equity is still yours. I think that's the biggest myth of all. Everybody thinks they're going to lose their house. There's nothing further than the truth. Another myth would be that the bank decides where the house goes. And
what do you mean by that?
People think that when the two people pass away that might be living in the house, that the bank takes control over the house. Well, that's not true. Whoever the people leave the house to, their heirs or their charity, or, you know, I couldn't answer them. If you asked me where does the house go in a reverse mortgage, I would say, I don't know. What does the will say? Whatever the will says.
So whatever is on the will.
Whatever the will says. Now, another thing though is that the only thing that's obligated on the loan is the house itself. So the bank can't come against the heirs and try to collect money from the heirs. For example, if they're upside down in the house. So let's say that they live to be over 100 and they spent all the money down to zero, because basically what they do is they take the payments out of the equity. So little by little, your equity gets dissipated, and then it's very possible that somebody lives past all the equity in their home. They never get kicked out of their house until the second person dies. All right, so basically they can be living rent-free in a house that they are upside down in. Now, what happens when they die? Well, the heirs can just toss back the keys because that's what the mortgage insurance is for on the reverse mortgage.
Oh, okay.
So the people never, the heirs or whoever is going to be inheriting the house isn't going to be obligated if the house is upside down, because all they have to do is give back the keys. Or if they really want to keep the house, which it's 1% of the nation wants to keep their parents' home, less than 1%. But let's say they did want to keep it, then they could just buy the house for 95% of the appraised value then.
Oh, okay.
And then even if it was upside down, they could still purchase it for that, because then the mortgage insurance will kick in to do the rest.
Oh, okay. Very cool. Now, will that be considered to be, at that point, let's say that the parents live to be 115 years old and whatnot, so the house is upside down, so will it be a short sale?
No, it will just be a regular sale, because the mortgage
okay.
insurance will just kick in.
Okay, for those who do not know what a short sale is, that's a whole different topic. We'll talk about that some other time. But anyways, so can anyone qualify for this type of loans?
The only requirement is you have to be 62 and older. There's a proprietary brand that you can be 60 and older.
Oh, okay.
And those loans can go up to a $4 million loan amount.
So for a couple, let's say that mom and dad, now one of them is over the age of 62, but the other one is only let's say 59. Can they still qualify because one of them is already over the age of that?
They can still qualify. However, the loan will be based on the younger person.
Oh, okay.
So the loan amount, because the loan amount that we give out is based on age.
Okay.
So we will go by the younger age. The younger you are, the less money you can get out. The older you are, the more money you can get out of the house.
Okay.
Because there's less time for living, basically.
So being old.
Being old is an advantage. Well, in this case, being old is an advantage. Yay! Finally.
So give us a rundown of what the actual transaction will look like. Do they go and get an appraisal? Do they do a closing? How does the whole transaction? So let's say that mom says, Nada, let's do a reverse mortgage on my house. So tell me what is going to happen from now on.
I come in, I give you a big proposal, and your hands are probably going to get tired from signing papers because it's more than a regular mortgage, but that's just to protect the consumer, because there's been so many laws that are out to protect the consumer now. So we go over the proposal, you sign everything. At that point, I get your social security card, 2 months bank statements, just like a regular mortgage.
Okay.
A couple extra things, because I'll need the deed to the house and the state, if they do owe a mortgage on the house, the statement of the mortgage. So it's just like a regular mortgage that I'm going to collect paperwork. We order an appraisal, just like a regular mortgage. If the appraisal comes in higher, then the loan to value will go, they'll get some more money out of it. If the appraisal comes, it's all based on the appraisal, just like any other house. It's all based on the appraisal. And the closing is like within 30 days, just like any other mortgage. It's really not a difficult process.
Okay.
It's not at all.
So let me ask you a curious question. So let's say that mom and dad have a house, it's completely paid for. The appraisal came in for a roundup number, $200,000, right? Can they take out the entire $200,000 as a mortgage, as a reverse mortgage, or does it have to be a percentage of that $200,000?
Back to the age is going to be, the age is going to give you the percentage of what we're going to
okay,
loan.
so it's kind of like a
So
combination
for
of both.
example, if you're 62, you're probably going to have to come to the table with like 60% down, so you can get 40% out of the house. That's just a round number. And as you get older, in your 80s, it's probably less than 50% that you have to have down. So you can always it's going to be a percentage of the house that you're going to get back.
So that's one of the myths that I always hear. Well, I have $200,000 in the equity of my house. I want the whole $200,000 back.
No, they're not going to give you the whole thing. No, they're not going to give you the whole thing, because the whole point of this is you don't have to make a payment again. So they need to have some equity in the house in order to pull the payments from. So now another myth is you can make payments on a reverse mortgage.
Okay.
I just did a reverse mortgage yesterday, and the interest rate is well below 3%. So let's say she wants to keep the equity in her house and she doesn't want to spend it down. Nothing's stopping her from making that payment on interest.
Oh, okay.
You know, she can make that payment on interest and always have the equity in the house. There's nothing stopping you from actually making the payment, a full payment, and maybe building your credit line. Another thing is if you have more equity in the house than what we're going to loan you, then that credit line also grows as well. So that's also very nice too, and it grows at 0.5% more than what the interest rate is.
Very interesting. Now, with here in Florida, because we have so many seniors in Florida, because they all end up moving down because of the weather, there's a lot of people that they want to take advantage of our senior community, and it's really sad, but it's the truth. Now, for our senior community, what are the things that they should look out for to prevent fraud, or to prevent somebody, Joe Schmo, telling that, oh, don't worry about it, I'll do a reverse mortgage, and then they end up doing the wrong thing? So what are the few things that you can advise them on to look out for?
Well, I would make sure it's a reputable company.
Okay.
I would make sure that there's so many laws in place now. It's kind of hard to take advantage of them.
Okay.
You know, if they're doing the right thing. Now, the only thing that they could perhaps see is there's origination charges, and some people can charge. Can be very expensive, and at my company, we usually do not charge origination fee, which can be very costly. It's 2% of the first 200,000 and 1% thereafter. So if you have a $200,000 house, that's a $4,000 origination charge.
Wow.
And a lot of times, a lot of people still charge this. At my company, we take pride because we try not to charge that origination fee, and so that's something that they may want to look for, because they could save a lot of money with that origination fee. Other things, other than that, the closing costs are very similar to any other house that you would be purchasing.
Okay.
It's, you know, it's just like any other house, really.
Closing costs, now that you mentioned closing costs, do they have to take that out of their pockets, or can they use it from the equity?
They can use it from the equity.
From the equity of
They
the
don't
house.
have to come to the table with anything.
Oh, okay.
They don't have to come. It'll just be wrapped up as part of the money that's coming out of the house.
Okay. Now, what would you say that somebody that is a senior should look into doing a reverse mortgage? Oh, you know what? Can they use... I know that there's two types. The regular reverse, and then there is another one that they can use for purchasing. Can you talk to us about that?
Yes. That's a very exciting one. So...
I know.
So that's very exciting. So... For example, somebody comes down from, let's say, Tennessee. Maybe the values aren't as high there in Tennessee. They sold their house cash. They come down to Florida and they want to purchase their dream home. You know, their retirement home that they're going to... Maybe they want to be on the water. Maybe they want to be on the golf course. But they only have $300,000.
Okay.
Well, you and I both know in Florida that you're really not going to get on a golf course or on the water for $300,000, correct? Maybe you could get in there for $500,000 on the water or golf course or something. So basically, if they come down and they take that big chunk of money, they could do a purchase reverse mortgage. So let's say they're 62 years old. They could put down, let's say for example, 60% of the house. So let's say take that $300,000. They could buy a $500,000 house, put down 60%. And they can now live in that dream home and never make a payment again. Gotcha. So they can basically take that lump sum and put it towards a more expensive house. Or, if they don't want to do that, they can maybe save some money, maybe take $150,000 of their money, maybe purchase a $300,000 house and keep $150,000 in the bank. So it's a really smart way to purchase a home for anyone 62 and older, because they can maybe perhaps hold on to some of their money or get a more expensive home nicer than what they ever dreamed of.
Oh, okay. Very
so
cool.
It could work both ways, you know, and it can work as a refinance, as a needs-based loan, or it can work as you buy a house with it, with a lump sum of money, and you get a more expensive home than what you thought.
Very cool. And now lastly, why would you say that a senior person should look into doing a reverse mortgage? What's in it for them?
Well, what's in it for them is that they could have monthly expenses much cheaper because they won't have to pay principal and interest. So that's one thing if they're doing a purchase. Another thing is, let's say if they needed, long-term care, or let's say they needed some extra income and they, on a refinance, they could pull some money out of it and use the equity of their home and not be disadvantaged. Quite honestly, I feel if my mom needed to do a refinance, a reverse mortgage, it's more important to me, and I think to most children, that their parents live well as opposed to them inheriting their place. At least that's how I feel. I'd rather my mom live well. I can take care of myself. Let her live well and use the equity in her home. So that way she can go on vacations, or maybe if she needs long-term care, or whatever the situation may be. So I think it's a real advantage for them to take to use that reverse mortgage, so that way they can have a better retirement.
Gotcha. Well, folks, now you hear it. So it's not as bad as what you actually think, or some of you will think that a reverse mortgage will just pretty much have a Joe Schmo coming over and taking your home away from you.
That does not happen.
No. So if somebody wants to say, you know what, I might be interested in doing that, can they come up to you and say, hey Nada, can you look at my house and can you do just kind of like a little consultant first?
Oh, I always go out and consult first.
Okay.
We go over, how it works. I give them a proposal. There's no obligation whatsoever.
Okay.
So I can go out and show them what it's about, and they can make a decision for themselves.
All right. Well, that sounds good. So guys, if you have any questions, I'm going to put her contact information at the end of the video, and we're here for you. So if you want to purchase a home, you have a little bit of money under your mattress. So
no, it has to come from a bank account.
Oh, there you go. So no money from under the couch or under the mattress. I'm sorry, but yeah, just contact us at any time, and then we'll go over and then we'll see what we can do for you. And stay tuned. Thank you for watching. Thank you for being here.
Thank you for having me.
All right. Bye.
Bye.